Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Sten with tonight's Deep Dive. It is March 12th, 2018, and the market I thought I'd take a look at tonight is the Canadian dollar, with the ETF being FXC. Now, we recently had a surge low that occurred. That was 4 trading days ago. That's what the 4 represents. And then we recently had a pulse low that occurred as well. And so what I want to do is just take a look at this particular market and just give you a feel for what's taken place. If we pop over here to the TradeStation Outlook, here is the Canadian dollar. You can see the market had been in a strong trend to the downside. We've had just recently a little bit of a surge to the upside. Now, we're at a critical point. This is part of the reason I'm actually showing this to you, that the market I would say is probably going to test support and then hopefully start to rally to the upside. But we're at a critical point that if the market should rally or should sell off even below this particular level here, which was back on the 6th of March, then we could have a totally different story. And so the level, the support level, is actually quite critical where we are right now. So here's basically what's taken place. You see all this blue, this cyan color, that is multiple support levels to the market, and it's kind of chopped up a little bit. We've got 3 different phases to it. Right through here, these setups here, there's a little break because of a holiday, so we have 20 days here. Again, a couple of breaks here because of the holidays and whatnot. And the market, we have a 50 right here, so a 20 and a 50. And they're almost right on top of one another, so it's almost like one consecutive support level. Then we had a small higher, but virtually the same 10. And that's where the market broke. And to be honest, the fact that we broke below it and had a closing below it, that's typically not a good sign. But then sure enough, the next day we had a break back essentially to that level, and a couple of 3 days in a row where it was staying at that support level and then started to rally. And so it's only just been in the last couple of trading days that the market has had an opportunity to come down and test, and I'd say significantly test this, because when you break below those levels, typically it doesn't come back. But we did. Market broke back above that level, and I would suspect that we're probably not done with this support level. So I'm going to use this 50 as the main number, which is at 0.77. I know it's going to be to 4 or 5 decimals, which you don't typically always look at, but it's 0.777558. That's where the support is, and this little refinement right there is at 0.77763. So that's what we need to stay above in order for me to feel comfortable with this particular trade. We have a hedge going on in the position right now in Canadian dollar. So if I come to the website, we have a 120 minute that is long, which went long on Friday, or let's see, Sunday night I should say, and that particular trade is negative. This is on a contract basis, so it's nothing really all that dramatic as far as open profit, but it's in the early stages. And then we have a daily system that has been short for a short while as well. So there's the hedge, 120 minute in the daily system. And so what we'd like to see take place is the market as a whole kind of stay above this level here, right through here, and then start to rally to the upside. So here's essentially where that system, the daily system, went short. So it has been in the trade for a little period of time, and then we just recently went long the market. So there's a little bit of hedging going on, and that's what's taking place at this particular juncture here with this support level. So if you're trading the Canadian dollar, watch these levels. If you go back to lows and closes back in mid-December of last year, you'll get a feel for what level we're actually talking about here, but that's pretty significant support to the market. And again, I'm a little surprised that it was able to break below just for that one day. That really surprised me, but we've been able to stay above it and retrace that nicely. So coming down, a little rally to the upside. It wouldn't surprise me to find another support level at that level and then make a decision, hopefully to the upside, but there's always a possibility where the market could really falter here. So just keep that level in mind, and we'll see how the hedge position in Canadian dollar with that long and the short simultaneously going on. We'll see how things kind of play out here in the coming days. So I appreciate you watching. We'll take another look at another market tomorrow. Bye-bye.